Good morning, traders. It's 8:04 a.m. Chicago time. Thanks for joining me today on episode number 2419. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, looking at the pre-market summary sheet here this morning from Convergent Trading, we do have a mixed market. You could see that we are holding sideways. We're holding sideways across the board. The S&P is right in the middle of yesterday's range, up just 3.25 points, which is about half a rotation. The Dow up 37 points or 10 basis points. NASDAQ really flat. The Russell flat, the Euro stocks flat, the DAX completely 100% flat, completely unchanged, unched, as they say. Crude, however, nice big gap up on this RTH session now that started about 5 minutes ago and is a runner. Crude battling with the 7750 key over underline for that product. Crude taking a huge pop this morning. Overall, we don't have very much. Target came out this morning with its earnings. I actually haven't looked at those. What is going on here? Economics. Okay. So, sorry guys, this thing is not behaving. Target came out at $1.89, beat by 35% on earnings, and beat by 2% on revenues. So profit margins expanding there. We also had Bayer this morning. Bayer beat by 3% on earnings and missed by 5.6% on revenue. There are others, Bank of Nova Scotia, Bank of Montreal, and so on and so forth. After the close, we do have HP and several others, Ross Stores, and so on. What's on the news? We've got the French and Spanish CPIs higher than expected. We've got ECB's laying positive supply shocks since December, and rate hikes have curbed inflationary pressures. Adecco seeing signs of hiring slowdown at start of 2023. White House reportedly scaling back plans to regulate U.S. investments in China. Apple suppliers racing to exit China. Meta forms dedicated AI product team to take on Microsoft and Google. We did get the S&P Case-Shiller number this morning, and that came in at negative 0.9% month on month for home prices. It was the expectation. The forecast was for negative 0.7, and then the Case-Shiller home price year on year has increased by 4.6%. The expectation is 5.8%. We do get Chicago PMI. This could be a mover. Sometimes is, sometimes not. But Chicago PMI comes out at officially at 9:45, comes out to subscribers at 9:41, 9:42. You can buy those 3 minutes for about $15,000 a year, I think, or something like that, last I checked. At 10 o'clock, we have consumer confidence expecting 108.5. The prior is 107. And then this evening, we have GDP growth out of Australia. We have the NBS manufacturing PMI, which is a key figure out of China, and the Caixin manufacturing PMI out of China as well. So if you're trading the Asian session, you're going to want to pay attention to those. Looking at the S&P overall has traded 230,000 contracts. It's in a multi-distribution, kind of leaning on balance, really, with a kind of a funny tail, but multi-distribution profile, 230,000 contracts, which is basically in line with what we would expect. 37% of the inventory is long, so pretty even, and the range is 31.5 points, pretty normal range for the overnight session. point of control of 39.92, and we have tested 4,375 in the overnight session. So we moved down to 72 and a quarter, and we shot up to 4,375. If you recall, yesterday could not hold on to the 4,000 plus handle, had a really hard time there. So that's where that stands. Yesterday, the plan, not to confuse you with these two cameras, but yesterday the plan was we were looking for the market to open at 4,008. And if you recall, I was looking for it to test the 4015, which is the point of control right here, expecting it to test 4015 or thereabouts, and then continue to push higher. If not, then it would test the 4015 and move down. That's this scenario here. And in that case, we're looking for 87, then 75, 75 being the gap to settle trade, last week's close, and then to continue to push, if it's pushing, to continue to push to 65, 67. That was the idea behind yesterday. Here's what we actually got yesterday. So yeah, we opened up in a gap higher. So if we look at the prior session, Friday, this is the Friday session right here. We pushed higher. We opened right up here at 40.10 and a quarter, tested down. We pushed up through the 40.15, which is right here, pushed through the 40.15 to the 40.25, and then fell right off. And at this point, we're looking for short side trades. We're looking for the IB low was broken. And we do have range extension down, so really look for shorts only, and then look for it to push back at least to the gap close. It got pretty close on this first push, back to mid, RTH mid, and then it finally pushes into the prior range. So next, we're looking for a gap to settle, and gap to settle was at 75, and it just couldn't get there. It ended up going to 78 and then settling at 39.88. Remember, 39.8850 is the composite point of control, volume point of control in this region. It is the most traded price in this region. It represents balance, and all we've done is we've traded above it, below it, at it, above it, below it, at it, and so on. So we're just completely in balance on a multi-day perspective. Where is it? Right here. So this is the daily on the S&P on the right here. This is the order book, just to see up and down. This is using rhythmic data, which is MBO data, goes all the way up and down the book. So we can see what's offered there. You know, this is not a firm information because the order book can change, but overall, this is what we've done from on a day-to-day basis. We're basically squished in here. Yesterday, we ended up pushing higher, and then coming back, attempting to push higher, then dropping through, and then we're just kind of sitting sideways right now. It's really not, this. Let's look at the extended. There it is for the extended. Really, we haven't done much. We have not come back and tested up here, this 40.60 area. We have not pushed down to this 39.20. If you recall, Friday's low expected, if we take out the 39.15, the low is expected to be 39.20. It comes from right on here, right there, 39.20. And we're just kind of sitting in the middle of these two boxes right now. And I'm expecting more of this sideways kind of churning today, not seeing anything different. There really isn't much this market can price. Remember, the market's main objective is to price what expectations the participants have into the future based on information received today. So As soon as the market has more or new information, it attempts to reprice that information, and its goal is to find the next area that represents value. We see that next area representing value as the point of control. As you see here, we're right on top of this point of control right here, the most prominent volume area. And then once the information reprices, it goes and it finds the next point of control, which is way up here, and so on and so forth. That's the market's mechanism. And right now, we got that PCE information that dropped us. And since then, we really haven't done much. We've just been going sideways. So I would caution you again, as I did yesterday, that we may be in for kind of a choppy type of market. Yesterday, if you look at the S&P overall, it did what was expected. Remember, I said we're coming off of a base of balance. On Friday, we are gapping up. We are pushing against this 40-15 right here. This is a multi-day, what I call a composite profile, multi-day profile. And we're coming off of a base of balance, so we're looking for 40-15 to be tested. And what it did yesterday, look at the value area of this profile, 40.24, and yesterday it went to 40.24.75. So pushed to the edge of value on that composite. Not that it's something that I track often, but it's on here. And then it ended up closing at the bottom end of the range. And what it looked to me like, it just didn't have much to hold those higher prices. So as soon as it dropped below 4,000, it went to 4,000 and it fought, dropped below 4,000. The next time it pushed above 4,000, 4,650, 4,007, and 4,650, it was met with sellers very swiftly and fell below 4,000 to close down below. And so to me, it looked weak. And on the reopen, we fluttered around. We ended up pushing below yesterday's low. And now we're trading right here against settlement. We are unchanged. This is not advantageous to us day traders, because what the market has done is it's basically shown us that it's exhausted. Friday it was exhausted to the downside. Yesterday it was exhausted to the upside, and it's opening unchanged. You want to pump the brakes or slow down on today's trading. This is my best advice to you today, is to just chill, because it's got, unless it breaks above yesterday's high or it gets below the 65, we are in a chop zone. Okay? So you don't want to overcommit just because you're here and you want to trade and you feel like you should be trading and the only way to make money is to trade. The thing is, you may put on a trade win, you may put on a trade lose, and spend the rest of the day trying to get back to break even when you could have been at break even all along, by simply sticking to the process and the fact that we only get paid when we have an inefficiency or when we see an edge in that the market is likely to go and test an area because it's failed to test the opposite, that sort of thing. So be cautious here. We are really trading in this zone right in here, and this zone is very mature. So it may spend another day chopping around in between 65 and probably 4,010 or 4,008 or so. May chop in here today before it starts to move away. That's the way it's looking. So there are no profiles to add here. The NASDAQ's in a slightly different situation in that the NASDAQ is relatively stronger. It traded in here pretty decent profile, and then it opened, tested the extreme of this profile, couldn't touch the low, and it finished higher on Thursday, and on Friday came down, gapped, and was balanced. And yesterday didn't even close the gap, whereas the S&P closed the gap. So to me, the NASDAQ's relatively stronger. In either case, these profiles now need to be integrated with each other as we're basically trading one profile into another. And right now, the NASDAQ's at that price that I gave you about a week ago before it got there on Friday of 12,050. I said that since we're moving away from this balance, the NASDAQ's next key area is 12,050. Currently, the NASDAQ's trading at 12,065. And what we have is the same situation in the NASDAQ where there's just nothing new to price in. We're at this highly accepted level at 12. You know, we have the millennial figure at 12,000. We have the highly accepted area at 12,050. And we're right on top of it. The NASDAQ is likely to be choppy again. So the thing to take away this morning is the big picture. While we're getting caught in the little minutia, the big picture here is saying that we are just kind of steady and holding in the middle. Look at that. The S&P, really what we've done is just kind of been sitting here and holding sideways. So you can see the book is always concentrated like this, but usually you see these century and mid-century offers. There's just, the book is quite loaded, and to me it just seems like the market overall is anticipating lack of movement. Okay, so that's how things look. The for crude looks a little bit different. So if you look at crude, we've been stuck in this 78 to 74 zone. We've been here for most of the month of February, and then, you know, we had some pretty decent rejection days here like we saw on Thursday. I'm going to merge this, and then Friday balanced sideways, and then now what we're doing is we are gapping up. Crude has gapped, and crude is showing a driving kind of an initiative buying behavior. What does that mean? It means that it opened, and if it becomes responsive, that means it is responding to the fact that it's gapping up. And so it's responding by selling in this case. If we open below, it responds by buying. In other words, it's responding to the fact that it's out of balance, and it's selling. And what you see so far in crude is it's open, and it's pushed higher, pushed all the way up to 77.84, something like that. And it's holding, or 83, and it's holding steady. I'm not quite seeing a drive in crude, but look at where the open is versus the current action. Keep an eye on the open. If it starts to extend down and the retests in crude are weak, then you are very likely to see it below the 77.50 yet again, and back at the 76, back at the point of control right here. 76 would be the target for crude if this gap up fails. The most important price in this area in crude is 77.50. It's been in play for quite some time, and we're right at it. So if crude decides to drive, however, if crude kind of holds the open and does not return to the open and holds the open and starts to one time frame up, meaning putting in higher lows on every rotation in every bracket, then crude is likely to go and check this 79 area right up here. 79.50 becomes the next key target, 79.50. Crude's got a lot to do to break out of this monster zone that it's been in. Basically, it's really 70 to about 80. So the fact that it's responding a little bit higher, we may see some risk on in stocks. I'm not sure, in fact, what has caused it to push up like this morning, but to me, the equity market has been following crude because crude has been going to where manufacturing is, to where consumption is, and that's supportive of equities. So we'll see what it does here, but I'm watching carefully to see if the crude falls below the open this morning. If not, then you really should be trading from the long side only, in my opinion. And the next stop is likely to be 79.50, which isn't too far. It's about a day or so of range in crude. Hopefully you found that helpful. Good luck today, and I'll catch you tomorrow. Don't forget to hit the like button. Only about 100 to 150 of you are hitting the like button. I'd appreciate it if more of you did. And of course, subscribe to the YouTube channel. It's free. Just hit the subscribe button. It helps the channel rank a little bit better, and for traders to find this channel more easily and learn to trade more from a foundational perspective, more long term than just watching someone scalp ES or NQ all day long. So to me, you can build off of what I'm telling you here. You can add your own secret sauce and create a sustainable approach to the market that is defined by context, edge, risk, R factors, those things that really matter in trading. Good luck.